Let's now cast our net a little bit wider and examine how the U.S. tariffs will impact Asia-Pacific economies. Let's speak now with Nick Marro, lead analyst, global trade with the Economist Intelligence Unit. Nick, good morning. Thanks very much for joining us. So 16 Asia-Pacific countries made the list, which we know includes Japan, there's China, Korea, Vietnam, and also Singapore. The number ranges as high as 49%. With Singapore, the only one that has a baseline tariff. I mean, are these numbers in line with what you were expecting?
Well, to be honest, we're still trying to figure out where these numbers came from. The justification for tariffs on South Korea and Malaysia, for example, were because they allegedly have tariffs of up to 50% on U.S. goods. But we know for a fact that that's not true. And so I think a lot of what the market's going to be doing this morning is trying to assess, where and how the Trump administration actually did their math. I mean, at the same time, when we look at kind of the wider region, the main message we're getting out of this is it's a bit worse than I think a lot of us were expecting. Maybe with Singapore aside, I'll come back to that in a second. But the tariff rates that we're seeing on, markets like Myanmar, Cambodia, Bangladesh, these markets that traditionally haven't really been in the crosshairs of U.S. trade policy, they're not really, the Vietnams of the world in the sense that they're facilitating Chinese transshipments. The fact that the net was cast so wide is quite surprising. I think Singapore is interesting because it has such a lower tariff rate vis-a-vis the rest of the region. I think there might be some actually positive implications for Singapore there. But I think right now, what we're digesting is the fact that this looks a lot worse than people were anticipating.
Right. Nick, the levels of vulnerability we know range widely within Asia's exporting countries. I mean, who in your view is going to be in immediate danger, meaning potential job losses, potential recession, and who's better prepared and I suppose to a degree better diversified to face these tariffs?
Yeah, I think the easiest answer to that question is China. China is very much both the explicit and the implicit target of a lot of these trade actions. And the fact that now we have essentially 54% duty rate on top of existing duty rates that Trump had imposed in his first term really shows that there's going to be a pretty significant export shock to that market. EIU's own forecast for China in terms of real GDP is around 4.6% growth this year. That was before this tariff announcement. But in any case, it suggests that the government is going to miss its 5% real GDP target for this year. I think we can assume that this kind of ripple effect is going to kind of come out to the rest of the region in terms of downgrades to real GDP forecasts for, say, Japan, South Korea, Taiwan, across a wide swath of ASEAN nations. The other market we're looking at very closely is Vietnam, because Vietnam has benefited quite handsomely from the China Plus One strategies over the past, 5, 6, 7 years. And the fact that Vietnam is now facing a tariff rate of, I think, around 46% really raises questions around the feasibility of that strategy continuing and the attractiveness of that market as a future investment destination, at least in the context of getting around U.S. tariffs.
And so, Nick, speaking of China, we know that Beijing is reportedly better prepared for tariffs now. But how do you see China react to these tariffs? And does it have enough tools to cushion the blow?
Sure. I think what we've seen to date and the policy signals that we've seen coming out of Beijing are very much indicating that Chinese officials want to move carefully. They want to move cautiously. We're still anticipating some type of retaliation to materialize. I think the Chinese government wants to ensure that it looks strong, that it doesn't feel like it's going to get steamrolled. But we're not seeing the same level of, say, tit-for-tat aggression that we saw during Trump's first term, whereby the initial tariff salvos in 2018, 2019 were very much met with a strong Chinese response. Now we're seeing a bit more of a targeted approach, focusing on specific product categories or even U.S. companies operating in the market. At the same time, I think Chinese officials are going to be very, very worried about the trajectory of the economy. The external sector picture is now looking a lot more dire than it had 24 hours ago, at a time when domestic consumption is still struggling to be fully revived. And so even if we do see some type of retaliation on the Chinese side, we are expecting it to be a bit more measured than we would have anticipated, 5, 6 years ago.
And Nick, I wanted to just go back to a point you were making earlier about the methodology. Does it look sound to you? Is it something that other countries are going to use? Because Trump says he's being kind and imposing only half of what countries are reportedly placing on U.S. exports. So that suggests India, as an average, 52% tariff on American products. Japan is charging 48%, and Taiwan 64%. Does that sound right to you, the numbers?
No, they don't. I personally don't know where these numbers are coming from, to be honest. I'm sure that there are certain industries that are facing higher tariffs than others, but from our understanding of Asian economies, I mean, these tariff rates, as alleged by the Trump administration, would suggest a much more protectionist trade landscape in Asia than what we're currently experiencing. And Asia is one of the most kind of free trade, embracing of globalization regions in the entire world. And so I'm scratching my head in terms of where this math came from. I think it illustrates, however, the fact that the Trump administration was very committed to this path of action, this trajectory that it wanted to impose tariffs, and it's going to use whatever justification it wants in order to enact these types of duties.
And Nick, I want to get your thoughts on these reports that China, Japan, and South Korea are considering a joint response to U.S. tariffs. What do you see as the potential for new trade alliances or agreements forming within Asia as a counterbalance to U.S. policies? Could this become a norm? These sort of shifting dynamics.
It's interesting.
Go ahead.
There's been a lot of attention about how, say, Trump's tariff actions have encouraged Japan, China, and South Korea, countries which have a ton of historical enmity and a lot of geopolitical disagreements, to come together in somewhat of a united front. I think at the same time, these reports are somewhat overblown. China, Japan, and South Korea have been negotiating a trilateral free trade agreement since, I think, 2012. And historical grievances, geopolitical considerations have remained important kind of obstacles to this. I think the urgency of U.S. tariffs means that these negotiations are going to come back online. There's going to be a stronger impetus for these to be concluded. But at the same time, China's automotive industry, particularly its EV industry, poses somewhat of an existential threat to Japan and South Korea. The Chinese demand side part of the equation, its consumption market is also very, very weak. And so China is not going to replace the US as a source of final demand for Japan and South Korea anytime soon. And likewise for those countries for China. And if you zoom out into kind of what the rest of the region is looking at, say, with the Regional Comprehensive Economic Partnership, RCEP, or the Comprehensive and Progressive Trans-Pacific Partnership, the CPTPP, a lot of these trade frameworks illustrate the appetite for globalization, but they're not really doing much to replace the lost demand that comes from the U.S. RCEP in particular. RCEP is massive, but really its best kind of characteristics are the fact that it harmonizes supply chains, kind of brings the supply side together. It doesn't really do anything to affect the demand side. We don't see these frameworks as offering a credible alternative to lost U.S. demand, at least not in the near term, and especially as the Chinese economy continues to decelerate. I think we'll still see actions and rhetoric from Asian governments to try and form more of a united, coherent bloc to try and respond to the U.S. protectionism. But what this means for actually cushioning trade flows and serving as new drivers of export growth, I think that story is a little bit more uncertain. And personally, I think I'm not super optimistic about it.
Right. Okay. A lot to take in, Nick. We have to thank you for your time and for your thoughts there, lead analyst at Global Trade with the Economist Intelligence Unit. Once again, thank you very much.